Alrighty guys, welcome to lesson 5. So we have covered quite a bit so far. We first dove really deep into market structure because that's going to help us to determine our directional bias for the session. We then looked at institutional supply and demand, right? So that's going to help us to time that directional bias. And then in the last lesson, we just covered liquidity concepts in depth, right? And that's going to really help us to time our entries from those POIs, those points of interest, to help us not get in too early with those liquidity traps, to help us refine the POIs, right? We want to look for those sweep zones where we believe that zone was, backed by institutions, and then also to help us refine our risk to reward, because if we can use those entry models correctly, we can really get those tight stop losses as possible. So today, what we're going to do is just simplify all of that for you by going through a trade recap of a trade I took not too long ago. Okay, and I'm just going to show you how you can bring all of those concepts together into a repeatable framework. So we're doing the same things day in, day out, and it's just a really powerful concept once you understand it. So without further ado, let's dive into it. So here we are on Eurodollar, and we are on the daily chart. Now we can see, remember, first thing we always do, what is our swing structure and what is our internal structure? We want to realize where those current structural ranges are to then tell us that narrative of price action. What is the directional bias we can expect? Well, on the bigger swing structure picture, we can see we are bearish. Price has formed a swing pullback. We've mitigated some premium supply to the left. We've taken some nice liquidity here as well. But the most important signal that we have that this daily swing pullback is now finished is that we've just had a bearish daily internal break of structure to the downside. So now this becomes a strong internal high, and therefore we expect those strong internal highs to hold so that the internal structure will remain bearish until it takes out that weak daily swing low. Okay, that's the framework that we follow. It helps to allow us to formulate our trade ideas around that. Okay, but obviously the majority of us are not trying to trade these massive daily trades, right? We're just looking for those intraday quick trades. So we just want to know what is our immediate bias that the daily chart is going to help us with. Well, after that internal break of structure to the downside, what can we expect? We can expect a deeper internal pullback. Okay, we've just mitigated some old demand here to the left. So one or two things will be in my mind. I'll be looking for quick longs into this supply and then looking to see, is that bearish order flow going to hold for another leg? Or are we going to get that bullish daily change of character and then have that deeper daily internal pullback? Okay, but intra-session, looking for longs up into that supply, right? 4-hour chart. Now the 4-hour swing structure is quite big in this scenario because we had this break of structure to the downside, then it broke to the upside, giving us this massive swing range. Okay, and then the last 4-hour break of structure we had was to the downside down here. So after a 4-hour break of structure, what do we expect? We expect a 4-hour swing pullback. So if that's the case, all right, we're coming off that daily demand. If I zoom in a little bit now, we have a very clear 4-hour internal range to work with within here. But rather than just focusing in right on this range and thinking it's going to be extremely high probability for this high to hold, because we understand the bigger picture and we know that we've just had that 4-hour swing break of structure, that can give us an edge that potentially the 4-hour internal structure may be ready to shift bullish to facilitate that swing pullback, right? And then again, we would look for the bearish IBOS. That would signal the end of the 4-hour pullback. And then we would look for that movement down. So you see how it's that same framework again and again and again. But by utilizing it over multi-time frame analysis, we can have an edge now that potentially you want to target past this 4-hour internal high. But again, I'm not a big swing trader. I don't look to hold those trades for those, massive, holding onto trades for massive pips or whatever to try and hit massive R. I'm just looking for my quick intraday bias. And what I can see is that I'm expecting a 4-hour pullback. We've mitigated hard time frame demand. And what is the structural signal that we look for to signal that an internal pullback is starting? We look for a 4-hour change of character, and we can see that we just had that with a nice strong candle closure there. So at a minimum, what we can now look to play is a bullish 4-hour internal pullback. Nice and simple, right? Just for a quick trade, at least up towards that level of supply, right, potentially. So the 4-hour, I think, directional bias is pretty simple. We come into high time frame demand. We've had a nice push up, 4-hour change of character, fresh level of demand has been created. Let's see if we can get a 4-hour mitigation potentially and look to trade up to here whilst anticipating that potentially we may get that 4-hour swing pullback. Okay, so that's a 4-hour chart, nice bullish bias intra-session. Now, if we look and zoom out on the M15 a little bit, we do have quite a large swing range as well. okay, where we actually had this movement down. That was that last swing pullback, and then we came down here. So after an M15 swing break of structure, what do we expect? We expect an M15 swing pullback. What will signal the swing pullback has started? We'll look for an internal bullish break of structure. We've now had that, right? We've had that bullish eyeballs to the upside. So now we want to follow that bullish internal structure to play the M15 swing pullback, and then we can look to see whether or not that strong high is going to hold, and we look for a bearish eyeballs to confirm that, but whilst knowing that potentially the 4 hour can have that pullback. So intra-session, we want to look for longs just to play the longs up to here, right? I think that's a pretty simple. Nice additional confluence, if we look at it from a liquidity standpoint, is that we took these big equal lows here during the previous day, right? So all of that sell side liquidity potentially has now been used by institutions in order to get long with a nice strong movement to the upside. So now what we want to do is wait for that internal pullback, and we want to try and time the higher low of that internal pullback, and that's why we want to then try and get long to target that next M15 internal leg, right? So where this price action right now is actually just around the daily rollover. So if we just fast forward through the Asia session, and I'm just going to bring it to around 6:45 a.m. GMT, so London time. That's 15 minutes before the Frankfurt Open. So the session that I start to trade from starts at 7 a.m. London time, when that Frankfurt volume kicks in, to around 10 a.m. Okay, so 7 and 10 a.m. Now, like I said, directional bias is very simple. We want to play that 4 hour internal pullback, which is also the M15 swing pullback. We have confirmation of that. The M15 internal structure is now bullish. So our directional bias is firmly bullish. How can we then time that directional bias? Well, what we want to look for is M15 POIs, because remember, in my trade plan, this is the most important time frame for me, what I call my medium time frame. And for me, that's the M15. That gives me my immediate directional bias that I want to trade in, and the POIs, so those zones that I'm going to trade from. Okay, so if I can tell you my trade plan in one sentence, it's to trade M15 zones with lower time frame execution from those M15 zones. Okay, so the M15 tells me the direction. It gives me the zone I have to trade from, can't trade from anywhere else. And then I look for the lower time frame entry within it, okay? So M15, we want to get bullish. Where are the M15 zones in which I can play that direction? Well, in this previous leg, you can basically see we had very tight order flow. And I'm basically viewing all of these zones as already mitigated. We kind of have the last one if we follow that demand chain, this being this zone here, which we can see price has now just mitigated or just missed during the Asia session, but that's where I'll just kind of refine it to that range, right? You can just see very, very tight order flow where price has moved to the upside. It has swept this low here, right? So we've taken some liquidity during Asia, mitigated that M15 demand. And then since then, it's had a little bullish change of character, and it's starting to form some bullish order flow. So what you'll often find is when you get that first initial internal break of structure, momentum is quite strong. The pullbacks aren't usually that deep, especially now we've taken liquidity and we're starting to form bullish order flow to the upside. So already I'm thinking, right, I want to get long, but do I want to get long in here? Like, do I want to start looking for longs within here? Well, no, why not? Because we're just moving sideways. Price is stuck within this Asian range. So basically what I would now do is one of two things. You can be aggressive and get in early and try and anticipate that break, that's fine. But what I personally prefer to wait for is either to see, is that a bit of a trap? Are we going to come down and take the Asian low? Potentially mitigate some deeper demand within the 4 hour demand, then I'll look for price to move to the upside, confirming the end of that internal pullback with a bullish change of character. That will give me a fresh level of M15 demand, and then I'll look for an entry within here, and then that will be a beautiful trade to target the next internal high. Okay, so looking for a deeper pullback, looking for fresh M15 demand to be created, just because there's nothing I really like in this leg to the left, and then look for that trade. That's option 1. Option 2, which I think is more likely because it already looks like we've had a bit of a pullback, we've taken liquidity, we've mitigated pretty much the top of that demand chain, and we're starting to push up. So option 2 is very simply, I'm going to be a little bit more patient. I'm going to wait for the session volume to kick in as it opens and look for that next bullish IBOS on the M15 to the upside, that bullish internal break of structure. Why do I want to wait for that? Well, what that will do is this will then become my new strong M15 internal low. And now, if price pulls back in, we have a very tight range to work within. We'll have a fresh level of demand, and then I can look for my long within here. Okay? So that's how I pre-plan things. Okay? Now, you can see that, just so you guys know I'm not just talking crap with the benefit of hindsight, in our Discord community, where if I just go back and search, we filter this by euro, and then I go back to this date, okay, you can see ahead of time, we post these analysis ahead of session, and you can see my M15 chart here, which I'll just open up for you guys in the full screen. And this is what I'm basically saying, right? So for longs, I don't know if hopefully you can see it if I zoom in. Ideally, price clears out this supply because this is where price was ranging sideways, right, before the session. I want to see price clear out the supply, creating another strong bullish internal leg, and then fresh M15 demand to trade from. Because otherwise, if we start pulling down, then I'll look for price to get the longs from within here, okay? So all of our members can see exactly those two scenarios we're waiting for. They know that we need to wait for a price to then mitigate or create a new fresh M15 POI. And then they have our mechanical entry models where they know every single rule within them. So they know exactly what to wait for, and everyone is on the same page, okay? So bit of patience. Let's see how the market opens. It chops around and then it pushes up, and we get exactly what we wanted for in that initial forecast. We were saying, let's wait for another break. So now this becomes our strong internal low, and we're looking for price to come back in and just look for another quick movement, okay? We have a very clear level of M15 demand that led to the IBOS, nice big candle. And this is very simply where I'll just be looking for. Ideally, in these scenarios, I want to see price almost immediately pull back in. Give me my lower time frame liquidity requirements for my entry model, and then just look for that quick movement, okay? So M5 is the execution time frame I primarily use. Now, I'm not going to give away our exact mechanical entry models. I've given you 3 really good versions with slightly loose rules in the previous liquidity concepts videos. So there's a lot of rules there for you to get your teeth stuck into and experiment with, okay? But I'll just show you the 2 possible entries that presented themselves when this occurred. So the first one was where I had my order here, because this is where one of our liquidity requirements was met at this stage, okay? And then this was the trade that I personally took live. So this is where I was targeting net 3R, so a little bit further with commissions. And then there was a second entry, which I'll show you occurred just a little bit after this, which was around here. So you would have been triggered in that additional entry. So obviously I'm not going to take in, me personally, I'm not going to take 2 positions at once whilst I'm still in the first trade. Just double check this. Yeah, so around here. And then likewise, that would have been a similar trade, okay? So 2 of the main entry models we used were presented. There's 2 opportunities to get involved. Plenty of time, especially if you use the M5, once we got that initial mitigation, to wait for your liquidity requirements. And that was it. So it chopped around a little bit, but then as New York volume kicked in, price eventually started to get some nice volume, and we led to those profit targets there. Now, full disclosure, I actually closed my trade early. I believe it was roughly around 1.7R, simply because this was high impact news, and I didn't want to hold through it. Okay, but everyone's going to have their different risk tolerance or not. But the main idea for this is that you can see how we bring all of those frameworks together. So super quick recap, I'll just start it from the 4-hour chart. You can keep it super simple. Zoom into the current 4-hour range. What did we have? We had a higher time frame demand mitigation, bullish 4-hour change of character. So what does that signal? It signals that at least the 4-hour internal pullback to the supply is starting. But because we understand the bigger picture, right, especially if you use the daily chart, we know that after a 4-hour swing break of structure, what can the internal structure be ready to do? It can be ready to reverse and facilitate that deeper pullback. So if you want to anticipate that, some of you can then look to hold those longer term positions, or just use that as information to help you not try and be aggressive with shorts here, because you can anticipate that move may occur, okay? But either way, we're just looking for that intraday bullish bias, nice and simple. Does the M15 back that up? Yes. We're also expecting that M15 swing pullback, aligned with the 4-hour pullback. Big liquidation of those equal lows. Internal structure has now shifted bullish. Okay, awesome. So our directional bias is firmly bullish. Very, very easy for us to get that and see that. Very, very clear. But we don't just jump in long straight away. We need an M15 POI to trade that from. Well, when the market opened, we were just moving sideways. You could get aggressive and get in there early because we've had a bit of a pullback. We mitigated the top of this demand chain. If you view all of those zones as already mitigated, we took liquidity. And then since then, we started to form bullish order flow. I personally am a little bit more conservative. I just want to wait for a little bit more. And we got that, right? We got a nice push up. If I zoom in, clear bullish IBOS, nice momentum. This becomes our new strong internal low. This is the clear and obvious POI. As soon as price comes back into here, I'm getting involved with either of my entry models as soon as they set up. I view this as a high probability setup, what we call phase C, which is counter swing but pro internal on a medium time frame. Look to get involved. Yeah, unfortunately didn't quite hit my full profit target because I closed before news, but pretty much almost got there. Quite a few of our members caught this, some held through the news too. And there we go. And then this did actually end up turning out into a full 4-hour internal reversal to facilitate that M15 swing pullback. So hopefully you can start to see now, as you apply these concepts, always mark your structural ranges first. Ask yourself what the current objective is of each time frame. Determine your directional bias then for the session, with the M15 being the most important, or whatever your medium time frame is. Okay. All right. Then once you have your directional bias, outline where those current POIs are, where you want to time. If you're trying to time that M15 high or low, look for where that can possibly be. Wait for your liquidity requirements. If there isn't currently one, a zone that you like, then just be a little bit more patient. The market will give you more information during the session. Wait for that price action to happen, gives you a fresh zone, and then boom, really nice trading opportunity. And like I said, this was outlined before in our pre-session analysis. We'll then post our markups too, right? You can see here, if I find the full breakdown, okay, it's all within here as well. So we do a full analysis, obviously show proof as well. And then what really takes your learning curve or speeds it up massively is a session and trade recap. So we do this for every session every day, like that would have been the one back in here, where we break this down in depth, 10 to 20 minutes, recap the price section in bar replay, show you exactly what I was thinking pre-session, any losing trades I take, the psychology struggles that I have, like everything, we cover it in depth. This is where you apply the theory to the real markets. We show you what we're doing day in, day out, right? We're not just talking the talk, we're also walking the walk. And this is a massive, valuable resource. And there's, I think, daily session recaps here for at least 2 years of videos. So you can go back through the chart markups, the video markups with your back testing, because when all the guys and girls are going back through and doing their historical back testing, they can quickly see our thought process and how we view the price action at the time. It's just an insane library of information, really. So if you want to get involved in the community, obviously, bit of a sales pitch here. You know what we're all about. We're doing that, and the guys and girls as well post really high quality analysis in the community channels too. So we don't let any crap analysis go in there. There's no dick measuring contest with random screenshots. Everyone has to post at least 2 charts showing their high time frame analysis and breaking it down in depth. And so really hope you took some value from that. I think tons of juicy information here to see how we trade, how we put all the frameworks together, and just bring clarity to what we're doing. So if you enjoyed that, we're here if you want to come and work with us. If not, you're going to still get more value. There's loads more videos coming in this series into your inbox shortly. Cheers, guys.